Good morning. This is Renee Hahn with William Ravis Real Estate, bringing you the monthly Naples market real estate update. I am going to apologize in advance because this one may be a little longer than my typical, only because I had the opportunity to go yesterday. I do this every year to the 2023 Economic Summit, and I'm always surprised how few realtors are there. It is great information. We had the chief economist from the National Association of Realtors there presenting. We had the Florida chief economist for Florida Real Estate Association. So great. We had Carol from Carol and Carol appraisers there. And then we had a chief legal counsel talking about some things as well. So it's just great information to help give us a broad perspective on the real estate market and some of the other variables that affect our world. So I've got some real-time information. I just took feverish notes and in no particular order before I jump into the stats for the Naples market update. I just want to share some interesting tidbits that I took notes on yesterday. So, as you can imagine, there was a lot of talk about what's going on in the broader economy with, the Federal Reserve and mortgage rates and all of that good stuff. We talk about the CPI index, and one of the reasons we care about the CPI index, in specifically in real estate and in Naples, is if you look at the Save Our Homes, which is part of the homestead program in year 2 of your ownership, there is something in there that says it has a cap for your appreciation, your tax rate, and it is the higher of 3% or the CPI index. And so, not just for that, but for other reasons, I do pay attention to the CPI index. And one of the things that was interesting, they look at stacking up where are the price increases, the inflation coming from. And the largest one was car insurance. It had gone up 19.1%. I thought that was really interesting. And there was some discussion about why that is. And to a certain degree, there's been in larger cities, because obviously these insurance rates can be set nationally, not just locally influenced. And there's been some increase in crime rates in big cities, breaking into cars and doing things. Rent was the second largest at a 7.8% increase, and food was the third largest at 4.3%. So I thought that was interesting. Now, keep in mind, home prices are not part of the CPI index because the home is considered an asset, if you will. So it's not even factored in. But again, these are things that are affecting the economy. What are people feeling, and how does that affect spending on big assets like home purchases? The other thing I thought was interesting, so this was the National Association of Realtors economist, and he talked about the fact that he thinks he's optimistic about 2024 and beyond, because when he looks at some of the leading indicators, and I'm going to read these to you. So we've got 7 million babies being born, 3 million marriages, 1.5 million divorces, 7 million people turning 65 or more years old, 4 million deaths, 4 million new jobs, and 50 million job switches. Now, why does he highlight those things? Those are all life events that can trigger someone's need to change residences. So when you've got that kind of national statistics going on, he believes that despite some of the economic challenges we've had and some of the political frustrations that are afoot, that he believes that the outlook is still good. You look at, in most places, we've still got a steady demand. The low inventory is saving us, of course. And interest rates, although they're tipping up to just above 7%, and there could be one more hike before the end of the year, most people will tell you they think they're going to come down by the spring. Now, I always say, everybody's waiting for interest rates to come back down. So what do you think is going to happen? There is, when those interest rates come down, if they come down significantly enough, you're going to have potentially an influx of buyers into the market, which means more competition. So I always say, depending on what aspect of buying in the market you're waiting for. Don't think that you're the only one, because there can be some other challenges that get introduced because of that. Um, Carol from Carol Freezers spoke, and it was interesting because she has been baffled by the market, and all she does in her company is appraise the value of properties all day long. They don't work for mortgage companies; they do independent appraisals. Um, and she expected, when she saw the peak of the market that we had as a result of COVID and everything involved around that time frame, to see a market correction at the end of that. And that typically will follow, within a certain period of time. We're now 18 months past that, and there has been no market correction, meaning prices to fall right back down to where they were before they spiked. So, to us, it feels a little bit more like a market reset. And the likelihood that prices are going to fall, unless there's some economic disaster that happens or some big natural disaster that happens, we think that's going to stay pretty steady. The other thing I thought was interesting, she pulled data for Collier County from the driver's license. Where are people who are changing their license to Collier County coming from? And I thought this was interesting. Not a lot of new information on here, but a couple new ones. So I thought I'd read through the top 12. So number one, New York is still the place that is feeding the most driver's license changes. Number two, Illinois. Number three, New Jersey. Number four, Massachusetts. So you can still see a big northeastern influence. Number five, Pennsylvania. Number six, Ohio. Number seven, Michigan. Number eight, California. Number nine, Minnesota. So Minnesota's newer on this. Number 10, Colorado. That's also newer on this. Number 11, Virginia. And number 12, the state of Washington. So we have a couple of newcomers on. It wasn't that long ago that we never saw buyers, for example, from California. And I've seen a handful of those as well. The one reason why you may continue to hear that, although we've got some economic challenges and we may have a short-term issue, because you're not seeing huge numbers of distressed properties, that lets you know that housing should still stay pretty strong. It's still very, very low compared to '08. He put up a graph, I wish I had it to show you, that showed distressed properties both in terms of foreclosures and then, more near-term indicators that foreclosures could be coming. And the spike that you saw in '08 of those has not been anything even close to reproducing since. We had a little spike in 2020 with the forbearance, because obviously with COVID, there were some benefits extended to people. A small one in 2018 with Irma. But for the most part, we've stayed really good on both forbearances and foreclosures, because obviously you don't want those eroding the value of property. Interestingly enough, there have been in Collier County year to date $7.7 billion in real estate sales, and that's through August. So again, it's still staying a pretty strong market. One thing that the National Association of Realtors shared is that they are trying to look for opportunities to use the power of our associations and make headway for our clients. One of the things they're working on, again, just a data point, is capital gains for the last 25 years. I did not know this. The last 25 years has stayed capped at $250,000. And if you look at everything else that costs money, nothing has stayed the same since for 25 years. And so the National Association of Realtors is working to try to influence government to reconsider what that cap looks like. What else would I share? Going back to the appraiser, Carol, she talked about, again, the fluid market making anyone really uncomfortable with predicting what's going to happen in the future with regards to local real estate. But she thinks, obviously, as we get into the seasonal, because we're back to kind of this seasonal behavior, that the next 3 months will give us a lot more confidence and indication of how the market might perform next year. I'm not going to read all of these because it's a very long list that I took of notes, but months of supply, because if you think about property values, obviously foreclosures can affect that, but we don't experience that a lot here in Naples because we have a 50 to 70% cash market at any given time. So if people are paying cash outright for their homes, the banks aren't going to foreclose on it. Makes no sense, right? So what really affects us is the normal law of supply and demand. In a balanced market, you hope to see the number of listings coming on or the inventory available at any time keeping pace with the sales. That's a balanced market. That's where neither side has a distinct advantage over the other, whether it's buying or selling. So a couple of things with inventory, for the most part, and you're probably feeling it if you're an active buyer in the economy, Naples is still running low on inventory. It's the one thing that's saving us right now. Because what you're going to see when we get to the stats, as traffic continues to run slow, the thing saving us is the fact that inventory is matching it. It's also running low. But there are a couple of places that are running a little higher. So let's just take a look. I'm going to try to get through these really quickly. So Port Royal, which is the single most expensive community that you can live in Naples, is running about 11 months of supply. They're actually slightly on the high end. But honestly, Port Royal tends to behave like no other market. So we don't tend to use it as an indicator of what's going on in the Naples market. The buyer pool is different. The prices are significantly different, but point of interest, 11 months. Aqualine Shores, along with a couple others that tend to be more volatile, I'll say, and perhaps leading indicators of what's going on. Aqualine Shores is running 1.6 years of inventory. So during the heyday in the last couple of years, their prices went crazy in a good way for sellers, in a bad way for buyers. They're now running pretty high with inventory. So something to keep your eye on. They had 11 new builds and only 3 sales in the last year. So in the new build area, they've got almost 4 years of supply of new builds in Aqualine Shores. Royal Harbor, 8.4 months. Lake Park. So Lake Park, for the appraiser, they consider that long stretch of land between Goodlet and Tamiami from Pine Ridge down to where 41 takes a turn to the east. Obviously, we know in the real estate MLS system, Lake Park is a much smaller area, but for their purposes, they call all of that Lake Park. They have 3.5 months of inventory. So that used to be a market that didn't experience a lot of activity, but people are coming in and doing significant renovations, in some cases tearing it down. And it's just in a good geographic area. So it's flourishing. Lake Park is still, that market's still demand. Old Naples, 5 months of inventory for the condo market, 6.8 for single family homes. Creighton Road is sitting at 6.7 months of inventory. Pelican Bay has got 3.8 months of inventory on condos, 6.5 on single family homes. Pine Ridge, which again is a little bit different than the rest of Naples, is sitting at 8.4 months. That market can sometimes have oversupplies, but it's sitting at 8.4. Golden Gate Estates, in particularly the Oaks and Logan, which are closer in, they're sitting at 5.4 months of supply. Gray Oaks is sitting at 3.4 months of supply, so that continues to be a constrained market. Vineyards, interestingly enough, so Vineyards sits just along I-75 just on the east side of it. And what's been attractive about vineyards, they're long overdue for a market reset, in my opinion, because it's a pretty good location. Sizable houses, sizable lots. They are older, but their club is not mandatory. So people can go there and join the club if they want all of the social and athletic stimulation that comes with that, but it's not required. So it makes it a really attractive place. Developers and investors are going in there and buying homes and completely revamping them and selling them for more than double what they put in. They are sitting at 1.3 months of supply. So keep an eye on that hot market there. Vanderbilt Beach is another area like Aqualane Shores that's starting to run high, so something to keep your eye on. Single family homes is sitting at 1.5 years of supply. Collier Reserve, 2.8 months. Quail West, 3.5 months. Quail Creek, 6.4. Imperial Golf Estates, 2 months of supply. Another one that I would say is a little bit like the vineyards in that it has a golf club, not as robust and as many activities and amenities as vineyards, but still a great proposition where people don't have to join the club. A little, homes are a little bit different. They're the ranch style with many of them with lower roof and ceiling lines, but beautiful large lots. And they're sitting really low on inventory. Lakewood out east, 2.9 months of supply. And then there's two communities that the appraiser keeps an eye on that are at their, in quotes, low end. And those have both been running low inventory, so they continue to stay strong, which is Golden Gate City and Naples Manor. So interesting. And then the last thing, I guess that's it from the Economic Summit. So we're 16 minutes in, and I haven't even started the Naples market update. But again, I hope you find that information interesting and helpful. So let's look at inventory in Naples. You can see here that year over year, there is a 7% increase in inventory, and month over month, a 1.4% increase. Pending sales. Now, before I talk about pending sales, let's look at showings, because obviously most people want to see a property before they purchase it. Showings was down 19% in August. So August 2022, there were 26,191 showings. In August of 23, there were 21,269. So again, a decrease in 19%. So when you look at that, and I just realized there's a typo, this should be a negative. So pending year over year has gone down 9%, not up. That is my mistake when I was updating these charts. Month over month, it's a 1.6% increase. So that's correct, but this is a down. So no surprise, if showings are down, pending sales are down, that'll eventually trickle to closes and so on and so forth. Median close price is up 5% year over year, and it's up 1.7% month over month. Now, what I want to share is in this metric of median sales price, this has been strongly influenced by condo activity. By the way, that's also true when we get to the next market metric, and I'll talk about that. So if you look at the condo market, the median closed price was up 7.7%. But hear me, single family homes was down 2.2%. So when you're seeing this 5% increase year over year, that is being driven by condo prices right now, not single family home prices, because again, single family home prices have been down year over year 2.2%. Now let's take a look at new listings. So again, what you're seeing here, new listings are up 3% year over year, 11.2% month over month. And this has again been fueled by condos. So if you look at single family homes, we're down 3%, whereas condos were up 10.1%. The other thing is that inventory And I should have mentioned this back when we were on the inventory. Condos are up 25.5%, whereas single family homes are down 3.7%. So again, inventory, median closed price, and new listings, these metrics are being strongly influenced by the condo behavior. And in fact, there's a little bit of a opposite in all three categories in how the single family homes are behaving. So closed sales are up 2% year over year. They're up 17% over July. So August had more closings than July did. Again, don't be surprised. Pending sales were down 9%. So closed sales next month may not look as favorable. And then lastly, days on market. So days on market is up 74% year over year. So we're still taking longer to sell, but month over month, we went down 3.6%. So I hope that that information is helpful to you. One last thing that I'm going to take the time for, and it's actually pre-recorded here just so that I can pop it in. I give these monthly market updates every month. That's why they're called monthly market updates. But there's a resource out there on my webpage, which is yournaplesexpert.com, that is available to you anytime you want. So I want to pop that in here. All right, we're going to show you quickly how to get to the market update information from yournaplesexpert.com. This website is loaded with resources for you in general, so take advantage of it. I created this for you after all. But on the header here, if you go to extras, click on market update, it will take you to this page that is filled with market update resources. As you scroll down, you'll see, of course, my monthly video that I produce with information for you that I hope you're watching. And then what's really cool, right below that, you've got these interactive graphs that are very simplified. So you can see only 2 graphs show up here. And that's because I've got them broken down into single family homes and condos. And you can use this drop down and go to any graph that you want to see. It's awesome. So let's just pick one. We want median sales price per square foot for single family homes. And you can see you've got 3 years worth of data that it'll take you through and give you some trend information. Hugely beneficial. So I encourage you to take advantage of that. You can access this at any time. You don't have to wait for my monthly update. You can request a home valuation. You can look at the reports that we produce. On the right, this Naples monthly market report is the actual full written report from Naples Area Board of Realtors that accompanies the data that I'm sharing every month. On the left, we've got the Institute of Luxury Marketing that I am a guild member of, an esteemed member of, that produces a monthly report for the luxury market. So you've got Naples area specific, and then right behind that, you've got a North American view. So great resources. Those are produced once a month. If you want to take a deep dive into a specific community or area of Naples, this is where you can let me know you'd like that information. And then the regular stuff at the bottom of the page, you can do a quick search if you're looking for property or just want to peek in on activity. And that's it for the market update. So I hope you take advantage of these resources. This is not just intended for people who are actively looking to sell or buy real estate. It's for anyone that wants to keep a pulse on the market. And after all, real estate is probably one of your bigger investments in your investment portfolio, if you will. So wouldn't you want to keep a pulse on it? I don't know. I would, but I hope you're having a great day. And again, thanks for stopping by. All right, we're going to show you quickly how to get to the market update information from yournaplesexpert.com. This website is loaded with resources for you in general.
Renee Hahn with
advantage of it.
Real Estate.
I created this for you after all. But on the
or you can
header
always find
here,
me
if you go
or
to
information
extras,
on
click
yournaplesexpert.com.
on
Have a
market
fabulous
update.
day.
It will